Why the rich don't talk about Bitcoin anymore? You think the rich are buying Bitcoin? They are not. They already bought it years ago. And now they are playing a much bigger game. They don't want more Bitcoin. They want to control the system behind it. And while retail chases headlines and price pumps, the wealthy are quietly moving into the next phase, issuing their own money. It's not Bitcoin they're after, it's stablecoins. This isn't about technology, it's about power. And if you're not paying attention, you might be playing the wrong game entirely. I'm Neil, and in this video we are digging into why the rich are done buying Bitcoin. Let's break it down. To understand the current market dynamics and the behavior of the major players, let's first take a look at the recent Heatmap and CVD data. Bitcoin began this session around 106k and initially pushed upward toward 106.8k, testing the upper end of its recent range. But momentum faded quickly and price reversed course. It then started moving lower, with each bounce becoming weaker, triggering multiple layers of long liquidations along the way. Eventually, Bitcoin reached a local low near 104.1k, where it found some solid support and rebounded sharply. That rebound carried price back up toward 106.3k, but sellers stepped in again and capped the move. After a pullback to 105.2k, Bitcoin made another push higher, triggering a wave of short liquidations along the way, and reached up to 105.7k, but it ran into heavy resistance and failed to break through. Since then, price has been bouncing back and forth between two clearly defined corridors. Resistance near 107.3k to 108.1k, and support concentrated between 105.8k and 105.3k, with lighter support zones extending all the way down to 102k. Classic compression structure, with price coiling between key zones as both sides build leverage, setting up for a high volatility breakout. Key resistance zones. The most visible resistance right now is stacked between 107.3k and 108.1k, where repeated attempts to break through have failed. This zone is likely packed with short positions and stop orders, making it a high-risk area for a potential short squeeze. Key support zones? On the downside, the clearest support lies between 105.7k and 105.3k, with lighter buy zones extending down to 102k. These areas have already shown strong buyer interest, sparking rebounds during previous dips. Bulls have held the line so far, but if this zone gives way, it could open the door to a sharper liquidation cascade. Conclusion? Bitcoin is clearly stuck in a pressure zone, squeezed between heavy resistance above and solid but vulnerable support below. We are seeing leverage build on both sides, and that's often the setup for an explosive move. A breakout above 108.1k could trigger a wave of short liquidations and send price accelerating toward 109k and beyond. But if 105.3k breaks down, we could see a fast flush into the lower 104k, 102k range. This is a classic calling structure, and whichever side breaks first is likely to catch the entire market off guard. So keep your eyes on 106.8k, that's where things could tip. Now, let us take a look at the CVD and whale movements. We can see a strong sell wall forming at 110k. Now, let us take a look at the movement of the whales. Starting with the brown line, which represents 1 million to 10 million orders in USD, we can see that mega whales began accumulating early and have continued to hold their positions. There is no indication of significant selling from this group, even during recent price pullbacks, which is generally a bullish signal for the market. Moving on to the green and purple lines, which correspond to 1k to 10k and 100k to 1 million orders, both groups show continued buying behavior. This suggests that medium to large players are still confident in the upward trend and are adding to their positions. In contrast, the red line, representing 10k to 100k orders, shows a sharp decline followed by the modest recovery. This pattern implies that this group may be engaging in shorter-term trading, likely realizing profits after the initial run-up. Finally, the orange line, which represents smaller retail orders between $100 and $1k, has been steadily declining throughout the period. This indicates that retail participation in the rally remains limited, with many smaller investors staying on the sidelines. Overall, when we consider the total order volume, we see that buying pressure is gradually strengthening, driven primarily by the larger market's participants. And my interpretation? Mega whales are still holding strong, which shows they are confident in the move. Mid-sized whales look like they have taken some profits along the way. Retail is mostly sitting out, either being cautious or late to react. Overall, the market still looks solid with smart money leading the way. So, while the charts show us where Bitcoin is now, let us uncover how the big players got there and why their focus has shifted. Why not Bitcoin anymore? It's simple, they already own it. Back in 2014, when most retail investors ran away in fear, the rich quietly bought Bitcoin. While we are still asking, is now the right time to buy? They've already positioned their capital and moved on. For them, Bitcoin isn't something to buy now, it's a game piece they already own. So, what's next for them? Now, they are focused on issuing stablecoins, not using them, not trading them, but becoming the issuers. Stablecoins themselves aren't exciting as investments. But from the issuer perspective, it's a totally different story. Take Tether, USDT. In 2023 alone, it made over $7 billion in profits. That's more than most global banks, and even more than some small countries' GDP. And the rich saw that. Hey, why can't we create the next Tether? Behind the scenes, lobbying, legislation, and regulatory talks in the US aren't really about investor protection. They are about giving banks, hedge funds, and large corporations a chance to issue their own stablecoins and push out the incumbents. Their logic is simple. We don't need to buy Bitcoin. If we issue the stablecoin, we make money off every single transaction, every day. But the public? They never wanted stablecoins. Here's the twist. The public never actually asked for stablecoins. Sure, we see headlines like pay your utility bills in USDT, buy your plane ticket with USDC, local governments launching their own stablecoin for payments. But in reality, hardly anyone uses them. And why? Because what people really want isn't a digital version of fiat. They want money free from government control. This isn't about tech, it's about power. Stablecoins are being used as a tool to replicate traditional financial control, but just under a different name. They have borrowed the concept of Bitcoin, but they refuse to give up control. To them, it's not about revolutionizing money. It's about replicating a profit machine under a new brand. Only people who understand this dynamic can truly explain why do people really want Bitcoin. Don't just ask what the wealthy are buying. Ask what they are trying to create. Because while they publicly criticize Bitcoin, someone else was quietly buying in. In 2013, legendary value investor Bill Miller started buying Bitcoin, back when it was only a few $100s. In 2015, he said, Bitcoin is for patient capital, but we didn't pay attention, because back then all we heard from the headlines was, Bitcoin is a scam, it's worthless. Let us be honest. When you truly hate something, do you talk about it every day? If they keep trash talking Bitcoin, it means they are watching it closely. Behind the scenes, they were buying, while calling it a joke in public. Even Warren Buffett and Jamie Dimon, at first they trashed Bitcoin, but eventually they changed their tune. And why? Because by then the price had already gone up. It's not a coincidence. 2014 was the year where many hedge funds and ultra-wealthy investors quietly entered the markets. They didn't buy it when it was booming. They bought it when it was quiet and cheap. While retail was scared off by negative headlines, they were quietly building stealth position and structural lows. And that pattern, it's happening again. This isn't a one-time play. It's happening again right now. Big institutions are trying to corner the stablecoin market to lock in transaction revenue. Asset managers are quietly accumulating Bitcoin ahead of ETF approvals. And during every correction, while retail hesitates, institutions are filling their bags. Who's moving right now? Let us talk about companies, because they are moving again. If this sounds like just another news cycle, you need to look closer. This shift matters. Recently, Tether and others teamed up to launch a new company called 21 Capital. Its entire model? Buying Bitcoin, that's it. They are not just converting cash to Bitcoin like MicroStrategy. They are issuing stock, then converting all the proceeds directly into Bitcoin. Their latest move? A single buy of 4,812 Bitcoin. And their end goal? To hold 1 million Bitcoin. Here's the key question. Why are companies storing value in Bitcoin and not dollars? Because dollars devalue. While Bitcoin becomes more scarce, it's not just about preserving capital, it's about riding a dual upside. Company stock value plus Bitcoin price increase. Once 21 Capital made their move, other companies started following the same strategy. For example, healthcare firm Kindly MD merged with Nakamoto Holdings to become a Bitcoin holding company. The new business logic? Want to raise your company's valuation? Stock Bitcoin. Michael Saylor, CEO of MicroStrategy, already warned us. Thousands of companies will eventually adopt Bitcoin as a corporate asset, and we are seeing the first wave now. Meanwhile, supply on exchanges is shrinking. Long-term holders are at all-time highs, and institutional buying? It's slow but massive. They are not waiting for headlines. They are moving before the price runs. My final thought, watch what they are building. Bitcoin isn't just for retail investors anymore. It's becoming the reserve asset for companies, institutions, even governments. The wealthy understand one core truth. Scarcity creates value. And the companies getting in early? They are not just investing, they are shaping the future of finance. So the real question isn't what are they buying? No, it's this. What are they quietly building behind the scenes? And the answer, as always, is Bitcoin. That's it for today. As always, stay sharp, stay informed, and I will see you in the next one.